This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Igor Khmel of Brik.exchange. Brik.exchange is a platform where you can trade stablecoins. Igor, thank you for joining us.
Thank you, Hall. Thank you for having me as a guest.
So what was your background before co-founding Brik?
Yeah, I'm a serial entrepreneur. So I was in Stanford Business School. I graduated in 2011. I then led innovation lab for one of the biggest banks in Eastern Europe. I worked for McKinsey. I worked for Citadel hedge fund. And finally, I started to do like fintech companies. And the company that I did before Brik, it was called Brik.exchange, which is asset-backed security token protocol for making tokens backed by some real assets. And the Brik is itself, it's kind of spin-off from my previous company, from all our expertise that we got during the last 4 years of making asset-backed security tokens. So this is how we come up with the Brik of the idea to launch stablecoin for real estate.
And so what led you to start work in this space?
It's a long story. So I was, to come back just to crypto, then I got my first Bitcoin from Brian Armstrong, the founder of Coinbase. I met when he just started Coinbase 2012. I was at that time just graduated from Stanford Business School, and I crashed his house of his Coinbase team with my friends. So we got introduced to, and he opened us accounts. We were one of the first users of Coinbase, basically. This is how we get now to crypto. Then I never opened that, and haven't touched this for years. And then basically, 4 years later, I started to come back to blockchain again. I was interested in all these asset-backed protocols and the opportunity to connect, to unlock liquidity of some real assets and to bring liquidity there through decentralized finance applications. So, and the biggest asset class, it's obviously real estate. So it wasn't many people just save money there. Many people, they invest there passively just in case. And at the same time, there is so many real estate that doesn't work properly, that just the money there stays and do not work. So, and we're trying basically to solve this problem. So to make the money work and to make really real estate be not just a passive kind of asset that you have, but really making money for you.
Great. So what's your advice for people investing in this space? What do you tell them to do before they write that check?
So there are a couple areas here. So one of them, it's obviously a real estate area. And in real estate, many of my friends in Bay Area, they have the strategy of investing in some single or multi-family properties where they're managing them and they're making return and kind of actively. So the most successful, there are those people who experience and actively manage. And most people cannot do that. So they have a day job, they have kids, they have they don't have enough expertise. So, and also not so many people have enough money to buy the whole property themselves, 1020. So in this case, you're usually entering syndicates. So you're entering syndicates, and a sponsor of the deal is making syndication in order to combine, to invite another 5, 10, up to 20 people to the deal. And the sponsor is sharing upside with those people. And then when they have all this all together, sponsor and syndication and syndicate of investors, they also go into the bank and getting leverage on top of that. So usually the sponsor having around 10-20% of the deal. Then this syndicated passive investors, preferred equity, they're getting another 20-30%, and altogether they have money to pay for 40-50% of the deal, and for extra 50, they're getting leverage. So this is how everybody gets increased, and sponsor getting more upside because he's a sponsor, because he's taking care of the deal. Passive investors have significant upside because of the leverage. And then when the payment starting, there is a waterfall structure. So the first money going to the bank, and then preferred investors get paid, and finally the sponsor investor. So this is the typical on the real estate, and this is exactly what we basically tokenize. So we come up with three tokens here. SQFT, square foot token, is equal to the average square foot price during the last month in the United States. So square foot SQFT token is pretty much equal. Basically, SQFT buyers, they just getting exposure to real estate, but not direct exposure. They're just getting something that is equal to their index price, to the average price of the square foot. No interest, nothing. This is not security. This is like it's like buying gold. Yeah, it's like buying like something which is like represent like some piece of like something very big portfolio. And then RUSD, the second token, the stable coin. This is the token where the people can get basically. This token built not for people, it's mostly for banks, where the banks can provide leverage financing to these deals through bank USD because they again pay interest on this token. And finally, there is the token called Brik. That's why the name of the protocol, Brik.exchange. This is what is called the protocol governance token. It's if you're familiar with the decentralized finance application world, which is, by the way, did grow like from 1 billion to 40 billion just in 8 months. So this market is like booming right now. It's a lot of liquidity there, and it's continued to grow. So in the decentralized finance application, there are many stable coins similar to BRICS built for digital assets. And one of them called MakerDAO, the company here in San Francisco as well. So in MakerDAO, this is one of the biggest. They have like $3 billion there in market capitalization. And they have this stable coin, and they have this governance token, stable coin called DAI, which is $1 all the time. And Maker is a governance token. So in BRIC protocol, the governance token is Brik. It's called Brik, and this token is needed in order to govern the conversion ratio, collateral, liquidation ratio as well. Basically, the token holders will enjoy kind of ongoing demand for this token because upside from the distributed portfolio, upside from liquidation of real estate will be spent in order to buy back quarterly this token and burn. So there will be upside demand pressure on the market.
So let's talk about the state of investing in this sector. How do you see the industry evolving from here?
So we already see with all basically this project. Yeah, it's quite unique, but it's not new in terms of like in terms of like nature. Yeah, so it's a home equity, and we saw previous projects such as like Figure Technologies, DV Homes, Points. Like CrowdStreet and some others, so there are many of them. Yeah. So usually those projects that have this crowdfunding element, they end up with having credit line or agreement with the banks that is underwrite the platforms and that is providing the leverage for everybody that is trading on the platform or refinancing. Some projects, they basically do not work even with retail investors, they work only with banks and institutionals. So the biggest credit line that I know, for instance, the Figure Technologies, they have more than $1 billion credit line from big banks, from Jefferies, WSFS, JP Morgan. Like DV Homes, $100 million, like Cadre, like $250 million from Soros. So basically, the investment banks, many of them, they have right now, I already talked to a number of them, and they have digital asset teams inside. And those digital asset teams that is responsible for structured products. So they understand that the market landscape is changing, and this technology, the blockchain technology, adds a lot of value in their business, in structured finance products. So it makes quick, smooth, cheap to settle, to refinance small assets, and do not basically in the traditional process of securitization or like of issuing repackaging these portfolios. So usually there is like small banks, they collect like a lot of like small mortgages, then they wait when there will be significant portfolio, then they like they wait like up to 6 months, they're building this portfolio, and then they resell this portfolio to the bigger bank or to the agencies, Fannie Mae, And it takes like, I don't know exactly, but as far as I know, like a couple months in order to transfer this portfolio and do reconciliation of all different databases, mistakes that's just done and all that. And then this big bank, let's say JP Morgan, is taking this portfolio, and then in some moment they basically, as soon as the portfolio will grow to like $1 billion approximately, they're issuing bonds. And they do securitization. So, and then anybody can on the open market can buy this mortgage bonds, trade it, and the whole process is very slow, kind of very lengthy, and this requires a lot of intermediaries, and that's why it's not so efficient. And it's you need capital in order to origination. So we're making this, and this is the reason, one of the reasons why it takes so long to buy real estate with mortgage. So like statistically, it takes it before COVID, it used to be like 42 days for mortgage and 45 days for HELOC, for home equity line of credit. So. And the reason for that, when you're buying that, there is a lot of like check mark that should be done. So like estimate of the property, your credit check, then they need to check with another bank or with an agency if it's eligible for refinancing, if they will be able to resell this. So when they give you the money, at the same time, they're checking if they will be to resell your loan. So the whole process takes a lot of time. That's why, and everything can be automated, everything can be decreased number of people involved, and they kind of go smoothly. We call this automation the process called continuous securitization. So it means that when you can do securitization of not of the whole portfolio, not wait till it's going to be $100 million, but just one property. So this is the revolution. This is the new thing that blockchain is bringing here.
Great. And so what's the growth rate of this sector, and how many companies are engaged in it?
So as I said, the biggest one is Figure. So which is unicorn at this stage already. So they raised like $500 million themselves and more than $1 billion of credit facility. So, and they're doing one thing, they're doing HELOC, they're doing home equity line of credits. And then there are a number of, and they are blockchain companies. So they have on the back Provenance blockchain, which is a fork of Hyperledger blockchain. And they consist out of two elements. One is origination, which is website figure.com. And then on the back, there is provenance.io. There is Provenance blockchain, which is kind of a marketplace for HELOCs on blockchain, where all the originators that are connected to the marketplace, they can resell. So, and then there are a number of like other players, which is more traditional, which started earlier, which is doing like home equity. I mean, one of the biggest one is Roofstock. So Roofstock, you can buy their rental property and receive return. They're developing also Roof One, which is marketplace where you, as a credit investor, can go there and participate in the shares, in buying share of the property. So there is some electronic or digital REIT companies, some just like Fundraiser. So there are a number of them. There is a number of them, many of them, and they just basically, but they are working not on the standard. They are kind of, Figure is probably the only one that is building the standard. All the other companies, they're just building kind of alternative lending companies, it means they are as much as they big as they good in like issuing these loans.
So what are the challenges in this space in building and rolling out these solutions?
One of the challenges in the space is to build open protocol and to change like how the things is going is to launch stablecoins. So to go away from security tokens and from investing in getting exposure in particular property, rather to kind of to get a coin which is backed by a not distributed pool of properties, which is quite diverse and automatically kind of supported and growing. So with stable coin, it's much better than security token for many reasons. One of them is liquidity. So you can trade it on crypto exchanges. You can trade it on DEXs. Security tokens, they were by default not liquid, and all the experiments that we saw, they were not so successful. The biggest security token in real estate was Aspen Hotel. It was like 30 million hotel with about 18 million issuance, which is traded on the zero right now. And last time when I saw that, the liquidity, daily liquidity for this coin was like a security token for this token was 5,000 on average per day, which is not enough. I mean, in order to really trade something that costs like $20 million. Yeah. So, and that's why it doesn't really work. And so the meaningful liquidity for this kind of assets should be like 10% of the market cap. So daily liquidity, 5-10%. It means like if you have like 20 million issuance, then you need daily volumes like at least 1 million. So this means it's going to be liquid. And this means that anybody who has a position there and want to liquidate it and exit, they can do this without the pushing market too hard. So it's possible to liquidate. So this one reason. And second reason is stable coins, they get access, the connection to decentralized finance application to the platforms such as Uniswap, Aave, like and Curve, so many others. So this is how the liquidity is coming to these assets, and this is how you basically anybody can buy or sell, or can sell property or sell share or sell the stable coin backed by per share of the property in a matter of like seconds. So it's the experience should be pretty much the same as you're having right now with the cars and Kelly Blue Book. So when you have like a lot of these dealerships, and if you run the have a car, you basically for many purpose the car is on the lease, and they don't really kind of or completely own the car. Yeah, it's their car, but basically it has line from dealership, and then after like a couple of years, 2-3 years driving this car, 4 years, 5 years, they can change it. So they can, it means that they have outstanding balance. They turn into the dealership, they get in the quote how much this car according to the Blue Book, and they're done. They automatically, they don't even pay this money. They just buy another car with the same like loan program, and automatically take the balance from that car to the new car. So this is expanded. It's happening basically during the like working hours in few hours, and this is exactly experience that we're trying to build with real estate as well. And we want people to kind of to have to decrease the barrier to buy real estate. So that's why some of our first properties there from Detroit. Detroit is struggling with selling, Detroit real estate market is struggling with absence of mortgages. So the people in Detroit, they don't have real access to the mortgages. 75% of deals there, which was in Forbes, 75% of deals there are closed without mortgage. And why? There are several reasons. First of all, like people don't have enough like good enough credit history there, and the second one, they don't have like like reliable proven income. And the second reason, basically not even people, it's a banking reason, because the properties are so cheap, which is like for banks it's not economically feasible to run mortgage programs there, because when the property is less than 80K, 70K. Banks operation costs are so high that is killing the deal, and there are many properties there which is like 55K. So that's why they don't have this access. And what we do, and for us the properties like in Detroit, they are perfect for tokenization and for because they can pay like a good rental income potentially. So and they're appreciating in value. So they were very good for us as an alternative, and for them as alternative to mortgage finance.
Great. Well, so how does Brik fit into this landscape, and what's the next step for Brik?
Yeah, our ambition is, and the goal is to establish the standard for financing of commercial real estate first of all, and then single families as well. So we want to become like as alternative to the mortgages and alternative to the traditional financing. And with the Brik, we also will provide bank financing, but it will be packaged in different way, and it will be more basically. This will help to some people. This will help, for instance, to cheaper finance like some situations like a jumbo loans or like flipping. So all this where the cost of money is very high. So the cost, like in flipping, like the cost of regular money for hard loans, it's like 8-10%. Right now, in some cases, up to 15%. So with us, it's going to be much, much lower. So we're going to start for the beginning. We're going to start basically provide money with for Brik. We're gonna take financing from Asian markets. The Brik investments in Brik will be closed at the beginning for years. It's not will be available because we need to make sure that we already have enough scale, and we at the same time we're preparing legal opinions. So we have already lawyers that is ready to write for us legal opinion about the commodity. This is like very sensitive topic, so that's why it not be available right away for US investors. But the money itself for commercial real estate developers, they will be available, and they basically, we talked with a good number of them, and for them this is pretty much the same process, but they already have with slightly different deal structure, for many of them this makes more sense than the current sources of financing. So we will be back to back kind of staying with other financial providers and kind of disrupt this market.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Yeah. So we will end up with something big. Yeah. So I'm in terms of DeFi markets, we think that there are no reasons why the Brik protocol, basically with potential support and from Asian Middle East market in terms of purchasing buying power, and all the properties here. So we should reach multi-billion market capitalization, something between like a couple of billions and $10 billion, like and meaningful. And this is completely possible because like we see a lot of supply from origination from US. We see a lot of demand coming from Asia, where the people are just staying in lines in order to buy some properties. So we'll offer them to passively invest. At the same time, yes, owners, they're not losing their real estate in any way. So any moment they can execute a call option and basically kind of release the properties. They do not sell the properties. They're getting the loan against properties. So it's a win-win, and we hope we are looking right now for the partners with multifamily portfolios and single-family residentials as origination partners to work with us to build our first portfolio, which is going to be $30 million. We already have like about half of that confirmed. So it's single multifamily properties on East Coast and Midwest. And as soon as we reach $100 million portfolio, we already have confirmation from several big investment banks that are going to provide co-financing, and this means the whole deal become much better for sponsors and for token holders.
That sounds great. Well, how best for listeners to get back in touch with you?
Yeah. Please feel free to mail me team@dowreit.org or go to our website Brik.exchange.
We'll put those in the show notes, your contact details. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you, Khmel.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.